Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Monday morning pre-market webcast. Okay, so Friday, you saw the bearish follow-through that we needed from this very ugly candle. I've got the annotated chart right here. Our theme for that chart was bears have set themselves up for a great down move. They just need to follow through. We had a really ugly candle, and they went ahead, and they did it. They did what they needed to do. They were able to seal that 35 area back on Thursday as resistance. On the March contract, that's 28. We only did 26.25 on Friday, so that was not threatened. Lower bands expanded. Remember, we sealed the 9-day earlier in the week, and it broke the 13.5, the 2021 floor that had been so important. That became the 13.14 floor, and that broke. And once that broke late in the day, here we broke it. Here's your 13.14 floor. This is a 15-minute chart of the S&P. We broke it back here. It confirmed sell rallies mode. We failed here at 26.25, broke back below, and once we retested 13.5 here after this battle, we had a battle over it, broke it, retested it, couldn't get through it, then we collapsed. We did as low as 87.75, and we went so far as to engage the third standard deviation Bollinger Band on the downside. So here we are back on the daily chart. You can see the gray line here, the third standard deviation band that's violated. We touched Sunday night the 100-day exponential moving average, and we've been bouncing a little bit since. We traded as high as 2008 half, but what we're seeing is what we see so many times, and I wrote this for my subscribers last night. Channel day with a question mark. If it's a channel day, this is what you're going to see. You're going to see a bounce, and you're going to see the second standard deviation lower band be resistance. And right now, that lower band sits at 2006.44. So if we see a channel day, then we get resistance in this area, and we should push back down to retest the lows, if not make a marginal new low. If we break above the band, then the key area becomes, once again, 13.5. So back here on the 15-minute chart, you get the lower band adjusted now into the 2006 area, and you're seeing resistance there. If it breaks above, then 13.5 becomes important, a retest of this area, of this battle and this failure. If it breaks over 13.5, I've got to be very honest with you. The bears would be on their heels. The bears would be on their heels because we've seen this so many times. 1813, 1815, you do 10, then you do 15 handles off the bottom, then you say, okay, well, do the bulls have to follow through tomorrow? Then they do, and then you get these rallies. If the bears want to control this market, they need to step in today and defend some of these key areas, starting with 13.5 and certainly 26 to 28. If they give up 13.5 and 26 to 28, I think that would put the bulls pretty much back in control of the market. Although I'm not going to get out of my my sell rallies mode until we break above the middle band. The middle band today sits, let me adjust it for today. There it is adjusted, around 51.68, 51.74 area. It's a moving target, obviously. But a break over 28, you still get into areas where, we're sell rallies. But I would caution getting overly bearish about, shorting a move that breaks up over 28 today. That said, that's pretty much what happened here, isn't it? I mean, ended up defending the middle band. Can they do that again? Possibly. They would have to get involved with the 9-day before that. You can see the 9-day slipping below the middle band. But one step at a time. 13. You got the lower band here that's already acting as resistance. Then you've got 13.5 and 28. All right, everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.